Ladies and gentlemen, good day and welcome to TCPL Packaging Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jenny Rose from CDR India. Thank you, and over to you, Ms. Rose.
Good evening, everyone, and thank you for joining us on TCPL Packaging's Q4 and FY'24 earnings conference call. We have with us today Mr. Akshay Kanoria, Executive Director, Mr. Jitendra Jain, Chief Financial Officer, and Mr. Vivek Dave, GM Finance of the company. We would like to begin the call with brief opening remarks from the management, following which we will have the forum open for an interactive question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now like to invite Mr. Akshay Kanoria to make his opening remarks. Over to you, Akshay.
Thanks. Good evening, everyone, and thank you all for joining us on our earnings call for the period ended 31st March 2024. I trust all of you had the opportunity to go through our results documents shared with you earlier. I will initiate the call by taking you through our business highlights for the period under review, after which we will open the forum to have a Q&A session. We have concluded the year on a positive note, showcasing resilience as we have navigated a subdued demand environment in the domestic markets. In FY'24, our consolidated revenues rose by 5% to 1,541 crore rupees, supported by export initiatives and healthy contributions from the flexible segment. EBITDA grew by 7% to 251 crore rupees, translating into a margin of 16.3%. In Q4, consolidated revenues crossed 400 crore rupees, with EBITDA reaching 70 crore rupees, reflecting strong margins of 17.6% respectively. Cash PAT for the year and the quarter stood at 206 crore rupees and 57 crore rupees respectively, showcasing our financial strength and performance. Despite the high base effect from the previous year and reduced demand in select end-user industries affecting our growth in FY'24, we remain optimistic about the market trends and anticipate a rebound in domestic demand in the coming fiscal. As part of our strategic plan, we are actively working on establishing a greenfield facility in southern India. This initiative is aimed at broadening our pan-India presence and enhancing our ability to serve both current and potential customers more efficiently. We are closely evaluating a land parcel on a long-term lease strategically located near Chennai. The location would be near major industrial hubs and offer easy access to core markets and logistical advantages. The expansion aligns with TCPL's goal of growing geographically alongside our customers and strengthening our leadership position in the industry. Further, we are pleased to announce that Mr. Ashish Razdan has joined us as an additional director or non-executive independent director, thereby strengthening our board. He brings expertise in corporate transactions including mergers and acquisitions and private equity. As co-chair of the India Working Group of the International Bar Association, Mr. Razdan holds an LLM from King's College London and management certificates from Harvard and IIM Ahmedabad. We believe his experience will be invaluable as we continue to expand and strengthen our market position. Moving on, TCPL has had a remarkable year, receiving numerous prestigious awards that highlight our industry leadership and innovation. We secured top honors at SIS SOP Star Awards 23 and received 6 awards at IFCA Awards 2023. Additionally, we received the Global Print Excellence Award and the National Award for Excellence in Printing from All India Federation of Master Printers. We were also congratulated and commended by our customers such as Kenvue and Marico for things like maintaining zero non-conformities as well as innovation. And also particularly of note is the fact that we won the Print Week Printing Company of the Year 2023 as well as the Innovative Printer of the Year 2023 award at Print Week Awards last year, which is amongst the industry's most prestigious awards or recognition. Furthermore, on the financial side, TCPL's significant growth over the years was acknowledged by the Financial Times and Statista, reaffirming our status as one of the rapidly growing enterprises in Asia Pacific for 2024. In line with our commitment to returning value to our shareholders, I am pleased to announce that our board of directors has recommended a dividend of 22 rupees a share. This marks the 24th consecutive year of uninterrupted dividend payouts, showcasing our consistent and reliable dividend policy. To conclude, our expanded production capacities and strategic initiatives position us well to capture emerging opportunities in the packaging industry. With a proven track record of growth, we are confident in our ability to continue delivering sustainable value to all our stakeholders. Leveraging our extensive expertise and institutional strength, we are committed to sustaining our impressive 30-year revenue CAGR of approximately 17%. On that note, I would request the moderator to open the forum for any questions or suggestions. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. The first question is from the line of Nitesh from Chris Capital. Please go ahead.
Hi, thank you for the opportunity. So my first question is
Nitesh,
on
sorry, can you speak a little louder, please?
Yeah, is it better now?
Slightly, thank you.
Yeah. So my first question is related to the capex, which we have for the Chennai plant. So how much capex do we plan to do for this plant, and how long will it take to operationalize this plant?
Yeah. We can't give for individual capex, for individual plants, but as a company as a whole, the capex budget, though obviously it's not 100% final yet, and it keeps changing over the year, is broadly in line with the previous year's number of little more than 100 crore. And as far as the timeline for this project is concerned, we hope to start this calendar year and certainly this financial year.
Okay, got it. And what kind of growth do we expect in FY'25 from rigid, flexible, or overall, if you could put some color on that?
Yeah. So, last year we had a headwind in terms of when we had a dual headwind, which was the liquor going out of the cartons and also the price reducing from the 2023 highs. This year, both are played out. So, we'll have a normal year. We are expecting a year of normalcy and hopefully we come back to our long-term growth trend this year. That is our ambition, but I would say that a lot of it depends very much on the kind of domestic consumption revival, which we are all eagerly, sort of hoping for.
So would you say around 10 to 15% growth in FY'25?
Yeah, so usually we don't give specific guidance, but that's certainly our kind of ambition or target.
Okay. And, as the share of flexible packaging increases, so how do we see our overall margins panning out? And what should be our sustainable EBITDA margins going ahead?
Yeah, so despite the flexible having increased already quite a lot over the last few years, the margin has been fairly, it's on an upward trajectory only. So we see the margin kind of sustaining at this 15 plus levels. And also, the flexible is growing, but the paperboard is also growing. So even though its share is growing, it's not growing as much as one would expect.
Okay, and just a last question on Creative. So what is the current revenue run rate for Creative? And have we cracked any new customers during the quarter?
Yeah, so the exact number, again, I wouldn't want to get into, but we have cracked several customers There were a few customers where we were doing very small value of like trial order business, where we have cracked major orders starting this season now. There's a big seasonal impact. So, typically new customers and all, they starting business around this time of the year. So we are seeing a good traction, and the growth will continue in high double digit, we estimate. We have cracked several customers in both the electronics segment as well as in the consumer products, cosmetics, and other segments.
Okay. And how do we see creative ramping up over the next 2 to 3 years? How big will it be in our revenue?
I'm sorry, I didn't hear that last part.
How big of a share will it have in our overall revenue?
Yeah. So, as we've said in the past, our goal or ambition with creative is to turn this into a triple-digit crore revenue business. And as a percent of our overall business, obviously it's not going to be a very large percent, but once it's got to a certain level of income, of revenue, I think the bottom line should be more healthy. And that's really what we are focused on. And basically this unit will be a highly specialized unit focused on very high value and high value added product. And this is at the premium end of the chain. So obviously to get big volume in that premium segment is not very easy, and it's a more, we see that growing in the long term.
Got it. And any timeline for this triple-digit revenue target?
No, we can't guide for timeline, but yeah, we hope to do as soon as possible.
Okay. Thanks so much, Akshay. That's all from me.
Thank you.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from the line of Nikhil Shetty from Nuvama Wealth. Please go ahead.
Yeah. Hi, Akshay. Congratulations on healthy operational performance. So Akshay, my question pertains to margin, gross and EBITDA, which is the highest level, and I believe it is because of positive contribution from the subsidiaries. So can you throw some light on this, what went well during quarter for subsidiaries?
Yeah. So on the individual subsidiary wise, we wouldn't want to get into it because we have 3 subs, so it's a bit of a combination of all 3 which are influencing the margin. But as a company as a whole, I would say that a lot of it is due to the benign raw material situation and the improvement in job mix. And overall, we find that a margin of between 15 to this level is a fairly sustainable number to continue with.
So this quarter number is around 17.6. So how do you see that number going forward?
We hope it will be stable, but we wouldn't guide for that long term.
So there is no one-off in this number?
So it's not like there's some significant one-off or something like that. No.
Okay. Yeah,
like no adjustment or inventory gain or anything like that that's influencing this.
Okay. So given now the things are improving, at least commentary from FMCG players like players talking about positive volume growth in FY'25. So can we see mid to high single digit kind of a volume growth in domestic market in 25? And as our export is already doing well, so the overall level we can able to reach over a 17 to 20% kind of a top line this year?
Look, I'm not precluding the possibility of a very good top line growth. It's certainly very much possible, but it will really depend on how the domestic market supports. Because now we have a fairly wide reach in terms of customers and industry. And if you see all across the last several years, the volume situation was very poor, in terms of our end customer. So there's only so much more we can squeeze out of that in terms of share of business and new customer development. So as long as the domestic industry grows at high single-digit volume, then I think we should be able to have a fairly robust performance on top line.
Any new plant addition during this year?
So
particularly in carton.
Yeah, we announced the Chennai plant in the board meeting yesterday, as well as right now in my introductory remarks. So that should start this calendar year, we hope, but certainly this financial year. But the revenue impact of that will really, it won't play out this financial year mostly. It will really come in.
So generally, how much time it takes from announcement to commissioning?
So to commission, we hope to do it this calendar year, as I said. But from commissioning to the time it starts stabilizing, that takes some time because you see the big customers, they all have audit, first of all. So that takes a few months to align and for that audit to get passed and then for the orders to start. And once you start a new plant, you also take some time to set the quality, set the systems, etc. So typically it takes at least a year before it's at a very healthy capacity utilization. So we expect the revenue impact of this new plant to start playing out only next financial year.
Correct. So this will be like a combination of carton and flexible both, or particularly dedicated to carton only?
No, we just expanded our flexible packaging plant very recently, only a little later in last financial year. So we don't have any major capex plans in the flexible packaging business for this year, and this is the carton manufacturing.
Carton manufacturing. And just if you can help me with the utilization levels in flexible and folding during this quarter.
So we won't give the breakup, unit wise, but let's say overall our utilization level is just 1 second, is approximately 80%, 75-80%.
75 to 80%. Okay. And lastly, on Inofin part, so how does that piece of business is now doing? Any client addition or any progress?
Yes, so in Inofilm, we are having some progress in terms of the quality of the film that we are manufacturing. We are now more or less stabilized in terms of the film quality, and we are actually making commercial supplies for certain customers of ours when it comes to the recyclable innovative packaging, and we are promoting this heavily. We have also been utilizing this line for some other innovative film applications, which we hope to be commercializing this financial year. So overall, with Inofilm, we are quite positive, and it is certainly going to become a revenue and profit adder to the company rather than a drag, which is what it has been for the last few years.
Yeah, thank you so much, Akshay, and all the best.
Thank you.
Thank you. Next question is from the line of Resham Jain from DSP Asset Managers. Please go ahead.
Hi, Akshay. Am I audible?
Yes, Resham. There's a little bit of background.
Yeah, sorry for that noise. But I have just two questions. One is on Inofilm. That what is the drag in P&L during FY'24? And in terms of new customer addition over here, how are you thinking? Because this is more of a sustainable kind of solution which will be providing to the customer. So in terms of ramping up the plant, because this is a continuous plant, so I presume that we need to operate this at a certain level of utilization to make a decent money. So just if you can share your thoughts around this point.
It's not continuous in the way like a blast furnace or a cement kiln is continuous. Like you can shut it and it doesn't have a bearing on the based on the output. But yes, obviously, the more continuously you are running it, the better from a wastage and productivity and quality point of view. We are basically targeting these major multinational type customers as well as export markets for these kind of products. And in the time that it's not manufacturing the high value add film, we are using it for other purposes like the regular films. But obviously the goal is to ultimately fill it up with these the value added film products. We have a R&D department in our flexible packaging business, which is focused only on this and on certain other R&D development. So basically, in the flexible packaging business, because it's such a large industry and there's so many end-use applications, there are many niche areas where innovation and good R&D can add on substantially. So we are exploring that, and this machine really enables us to do that. So yeah, we are quite positive. And in terms of the P&L drag, I said I don't want to get into that too much, but the drag has really kind of stopped becoming a drag this year. So it's no longer a drag. It's not adding anything much, but it's not a drag.
Okay, understood. And the second point is on your new capex, which you are doing. So there are you mentioned previously that you have existing plants where you can put additional lines. So how do you think about it? Whether putting a new line in additional location would have been more optimal, or based on your client's requirement and all, you have to put up in south so that business continuity and long-term growth remains intact?
Yeah, you're absolutely right. Of course, from a business and finance point of view, from a purely financial point of view, you should ideally keep growing the existing unit and keep doing brownfield, because that's much more remunerative by definition. But from a business point of view, if you want to maintain your market standing and position and relationship with customer, relevance to customer, then you have to expand with your customer. And to not be present in the deep south was becoming long-term, sort of hindrance. Or rather a bit of a threat, I'd say. So it was very important strategically for us to go to south, and the market over there is really expanding. There are big new investments happening every day, and it's an overall very dynamic and growing market. It's also well positioned in terms of exports because we are near the port, and we are in a very busy part of the world, Southeast Asia. So overall, it's a good strategic fit, and thanks to that, I'm sure the business logic will also follow.
Okay, perfect. I think thank you and all the best.
Thanks, Resham.
Thank you very much. Next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Is my understanding. So regarding the profitability of the subsidiaries, it has seen a significant improvement. So any comments on sustainability of the same and chances of improving this profitability further?
Yeah, so as I said before, there are 3 of these hubs, so you won't want to get into too much detail on any individual one. But, obviously we have set this up with some view in the long term. So they have to grow and they have to add substantially to our company profit. And, we hope that it will not just be like a small blip in the, the consolidation should not be like a very small difference. It should be a much bigger difference. That's our goal for it.
So basically we are saying from this, at least this quarter's performance should be sustainable and should get better, right? Because that's what should be because right now in the numbers it doesn't seem to be a drag as of now.
Yeah, but the thing is that the revenue now is very small. So small, if one bad month and your whole sort of performance goes for a toss. So one customer had a bad quarter and your performance can go for a toss. So our focus is really now on growing the level of operation, and we are sure that the bottom line will follow.
Okay. And on the Inofilm side, sir, the mechanical issue that we were facing regarding the machine, has that been fixed?
Yeah.
Okay. Okay. And can we just have the capacity utilization for the flexible line alone? Because we just wanted to understand when would you need to put in the next level of capex?
So for the flexible, we just added the line middle or late last year. So the utilization is still low, and there is no major capex planned for the next year at least.
Okay. Would my understanding be right that the overall capacity utilization might be somewhere between 60-70% broadly?
Yeah.
On flexible side.
Yeah. In fact, it could be even lower.
It could be even lower.
Yeah,
okay.
Yeah. Okay. We can do
Okay.
much bigger revenue on the flexible side.
And one last question from my side was like, this Chennai plant which we are visualizing, what percentage of the existing capacity can that be, or as of now we see?
I haven't worked it out, but it's just one line, and we have as a company about 20 lines, so it's not going to be a very big increase in the capacity. Yeah, so it's just a first start, so it'll take a while to really show up in the numbers.
And 100 crores capex that we have guided mostly would be for the land purchase of this new facility. Is that the understanding?
This we are going to be doing on a rented premise with a long-term lease. So the land building cost is going to be very marginal, and this 100 crore includes capex in our other units like brownfield expansion or replacements of older equipment, addition of some balancing equipment, and also Chennai.
And 100 crores we are talking about FY'25 capex, right?
Yeah.
Okay, fine, sir. I'll get back. Thank you.
Thank you. Next question is from the line of Dhvani Shah from Quest Investment Advisors. Please go ahead.
Hello.
Yes, Dhvani, go ahead.
Yeah, thank you for taking my question. So I just wanted to ask one thing about the new project which you have taken, the sustainable one. Can you give some insights? What will be the contribution? What is the total addressable market for the same? And what will be your margin?
So regarding the addressable market, ultimately the addressable market is huge because the entire flexible packaging industry is technically an addressable market. But now, out of that, how much is really seriously going to move into mono material structures? That is the question. So our idea of putting this line was that this is a start. It is a way for us to be a relevant player in the flexible packaging business and to give some differentiated product and differentiated solution to our customers. And the idea being that the overall market is so large that you don't really need everyone to switch to such kind of product. You just need a few brands really, and there's enough volume that we can cater to for even one or two brands of our large customers. That was the original idea. And of course also export markets, because those are switching to sustainable structures faster than developing markets. So that was the goal. And contribution to top line of this machine is not very high, but the idea was that we will manufacture film and we will use it to manufacture the final packaging would be.
Okay, and are there any competitors who have started the same thing, or you're the first one?
There are very few others in the market who are doing this. I again won't talk about specific companies on this platform, but there are not many in India and also not that many around the world, because it's a very complex product and technical challenge to execute.
Do you in future think of converting everything, all of your packaging into sustainable one, or only a few products will be sustainable and the other ones will be the regular ones as you give it to the market right now?
So the bulk of what we manufacture is paperboard packaging, which by its nature is very sustainable. So that, anyway, let's leave that aside. But if we're talking about flexible packaging, obviously the more we can do of this, the happier we are. And, it's really, we are happy to do anything. We don't mind if a customer comes and gives us an order for regular packaging. We're certainly not saying no. But the idea is that we should have an alternative and we should have a compelling reason for a customer to work with us.
So is there any reason like the government is giving some new new rules or something which is related to sustainable packaging, that is why you have started this one?
The government is getting more focused on packaging and packaging waste particularly, and the rules and norms are getting more stringent. And globally also this is the case. Like in Europe now, in coming years there's going to be tax on non-sustainable packaging. Question is obviously how will they define what is sustainable versus non-sustainable, and how will they track? But these are things that are coming, and we anticipate these coming in India also. There's already certain rules coming out about recycled content in packaging. So our contention is that before you can have recycled content in the packaging, the original packaging has to be recyclable. Because if it's not recyclable, then how will you have recycled content in the final product? That is our idea, and with that idea in mind, we took this step. You can read more about this on our website and various investor presentations and stuff what we have put out and our annual reports.
Yes. Thank you for taking my question.
Thank you very much. Next question is from the line of Vipul Shah from RW Equities. Please go ahead.
Thanks for taking my question. First of all, Akshay, it's a first where, on the call, since we've started this process, Mr. Kanoria is not there, so we really miss him. Secondly, just wanted to, understand from you, we put out for the first time in the deck that 32-33% of our revenues came from exports this year. Could you quantify, what was the same in the previous year?
Hi, thank you firstly for remembering my father, and I will pass your message on to him. I'm sorry, I'm a very poor substitute for him, but I'll do my best.
No. I think the baton is in good hands. So that also you can pass the message,
Sure, that I will pass for sure. And the second question about the export. Look, the export, I wouldn't want to give specific numbers and all, but it has grown, and we are very happy with the performance. And it's grown quite substantially over the last several years. So overall, we are quite happy, and we see that there is further room for growth, and we are very ambitious for our exports, and we continue to focus on those markets.
So, related to the export, another, couple of questions, if I may, is that could you quantify, whether it's high on a specific geography, or is it sort of well diversified amongst various geographies? Second, do you think this crisis in the Red Sea will impact margins in the exports? Because, ultimately, the biggest hit to the Red Sea, due to the Red Sea crisis will come in this June quarter. So, whether we will be able to mitigate that, or whether there will be an impact on the margins.
Yeah. So, I can't go into geographical split and too much detail on it, because it's a very sensitive topic, and our competition is always very eagerly looking at our results and all of that. But regarding the Red Sea problem, yes, certainly it is these kind of disruptions are a huge headache and long-term deterrent for customers to do business with foreign geographies, and they do impact our growth as well as our margin, no doubt, because when the shipping cost goes up dramatically, then you are competing with the local supplier, and he's suddenly much more favorable. Secondly, the customer is not so happy to take a price increase, and the tendency is to try to force you to bear some of it. So we had a very benign freight environment just before this. Obviously in COVID it was crazy, and then it drastically came down back to all pre-COVID levels, and then suddenly it popped back up. So this is a big problem, but it's a global problem. The whole world is facing it. Right now, containers from China are in short supply and prices are very, very high. So globally, it does reflect in the competitors' input price also, because somewhere they are also paying higher prices for their inputs. So it is not like the end of the world, but yes, it is a big hindrance to growth, and also interest levels of customers, particularly let's say in US or Europe or something, do get impacted when they look at 2-3 weeks more lead time and $2,000-$3,000 more on the freight cost.
Got it. So one another question which I had was, we alluded, and even on the last call, Mr. Kanoria alluded that this is now the normalized situation where, the more premium end of our folding carton business, which caters to liquor, on a year-to-year basis will now, be more comparable. What I just wanted to understand from you is that do you see a scenario in the near future where you see the liquor companies again coming back and asking for a paperboard packaging, or do you see now that that business is now virtually gone forever?
If you say that what was the scenario a year and a half back, or 2 or 3 years ago, the liquor companies were looking at further premiumizing their carton packaging, and they wanted more additional value, and they wanted more grammage, thickness, and look and feel. So obviously, if they wanted all of those things, they wanted for some reason, because they felt that consumers appreciating it. So I would say, obviously I'm a packaging company, so I will always sing the praises of packaging. But I think there is some value that the packaging adds. And it's very easy to say that, what's the big deal? Just remove it and sell the bottle. But they were doing it for so many years, and they were very happily doing it. So, the packaging certainly adds a lot of value. Now, what will happen in future, and what is their view, and what is the kind of market dynamics that plays out in coming years, I would not want to speculate. If liquor companies do come back in mass to paperboard packaging, then we are certainly ready to take advantage of the opportunity, and we welcome it.
Akshay, one more question, if I may, the new venture which we are putting out in the south of India, and I think it's really commendable on the part of the management to think 5 years ahead. Do you think there is room for even Creative to put up a facility there, given the fact that a lot of manufacturing of consumer phones and electronics is also happening in South India? Secondly, do you think from a location perspective, given the fact that it is close to the close to Indonesia, Malaysia, there is a prospect of we receiving or buying up, say, raw material which is much more competitive than what we source in India?
So both are very good points, and certainly, yes, this electronics market is very big in South India as well, and it will be one of our focus areas. Now, whether we do in Creative or we do in TCPL and all that, we'll see. Depends. And as far as the Southeast Asia, yes, absolutely. These are all things we will be looking at. And, it is very close by to those markets. And historically and even today, there's a lot of trade between India and that part of the world. And why import? Even export is a good possibility from here.
Thank you so much. All the best.
Thank you.
Thank you. Next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Thank you, sir, for the opportunity. So my first question would be, if you could, share So if you could tell me of our total revenue that we have done in FY'24, what is the total contribution that has come from FMCG segment, and how has it panned out in last 3 years? If you could just give me a ballpark number on what CAGR growth FMCG segment as a percentage of total revenue that has been done in last 3 years.
So FMCG, I will not get into specific numbers, please, but the FMCG is our largest segment, and historically it has been our highest growing segment. These last few years, FMCG volume growth has, as you have seen, I'm sure, in all news publications and publicly available data, volume growths, and therefore our growth in FMCG has been quite weak. And we see that hopefully coming back now. Our definition of FMCG and your definition may be slightly different, because we look at FMCG as in pure consumer products, not food, not beverage, not pharma. We don't include all of that. But
except food and beverage, right?
Sorry?
Excluding food and beverages, I mean.
Still it's our largest segment, and historically it's been our largest growing, but these last few years the growth levels have been quite not very commendable.
Okay. I understand, won't go into specific, but it has been more like flattish in last 3 years. Would it be the right way to understand it?
Yeah, on a volume basis it's been growing, but marginal.
Okay, right. Also, sir, due to this Red Sea crisis, just to understand that what is the estimate that our net working capital days could be affected? I mean, it is as of now around 85 days if I'm not wrong, for the entire year. So, what levels are we seeing it for the current year?
No, it's This is including the effect of this Red Sea crisis. So whatever it is today is, this crisis has been on since November, so there's nothing that it's all there in our numbers.
Oh, okay. Okay, fine. Yeah, that's all from my side, and all the best, sir.
Thank you.
Thank you very much. Next question is from the line of Pulkit Singhal from Dalmus Capital. Please go ahead.
Thank you for the opportunity and congrats on a good margin performance and managing the firm well in tough year. Just a couple of questions. One, if you could, just talk about the rigid packaging space in general. How big would this space be in India, either in terms of tonnage or rupees, and how big is, say, the smartphones within that? Some broad numbers if you have, and what are some of the trends shaping demand there? Are there some movement towards rigid packaging that is happening? So I'm just trying to get a sense of that space.
So thanks, Pulkit. Nice talking to you. We don't have any specific number to share on, unfortunately. However, just generally speaking, I would say that one of the biggest segment of rigid packaging is in the mithai space, which is a bit of a challenging market to tap because that is very, very decentralized, and it is mostly dominated by small local players who have semi-automatic or manual machinery to manufacture the boxes and vast range in terms of quality. So that is really the bulk in the country. So even if you have a puja at home or you go to a wedding or something, those mithais will be, at least a very large chunk of them will be in rigid boxes. That is the real bulk requirement. Then I think the electronics and all is a distantly behind. Even things like saris and shirts and banyans or lungis and those kind of things are packed in rigid boxes. So again, these are very unorganized segments of industry, largely catered to by small local players who and a lot of cash business as well. So that's the real, I would think that's the major bulk of the market. In terms of the electronics, it's obviously driven by smartphones and by these new wearable segments. And then after that, there is cosmetics, FMCG, like perfumes or gift boxes and things like that. There also the bulk of the requirement is these small volume gift boxes, which are predominantly again locally sourced by small scale suppliers. So it's a very unorganized market. It's not very large. There's very few players who are very focused on rigid boxes, who have a decent turnover in, who would register in any list of top 10 players in paperboard packaging. So it's a fairly decentralized kind of business, but we see long term all our major customers having some or the other requirement, because ultimately, as you keep going up the premiumization chain, you will be requiring such packaging. And the electronics and smartphone growth in India will all add to the requirement. So that is our view on this business.
Understood. I'm presuming even paper packaging at some point was highly unorganized. It's still quite unorganized, but as there's more brands and get formed even within saris, and even how the regional chains, mithai walas get bigger, because there's a lot more even within that space branding also happening. Is that like an opportunity that you would look into, or would you focus more on just on electronics for now and how to scale up there?
No, absolutely, you're completely right. And if we look at our paperboard packaging story also, 20 years back or 30 years back, we would have been one of the few people to have a new machine, the most of the market was buying second-hand presses. And there was not enough demand. People thought that demand kahan se aayega to afford your expensive imported German presses. And obviously that really took off in the 90s and 2000s. And it's come to like a certain base now, but still obviously there's a long way to go. But I'm saying at the start, like in the 90s or early 2000s, when people looked at paperboard packaging, that was also seen as a small niche item only for the premium sort of boxes. Otherwise, most things were sold in a flow wrap. But, we see the same thing hopefully playing out in rigid box. If we look at our neighbor China, the kind of capacity and machinery that come up over there for rigid box manufacturing is just unbelievable and staggering in comparison to the India market. There's many companies who are listed players, largely in rigid box packaging, who are in the hundreds of millions of dollars. But, so there's a huge scope. There's no doubt. But today we are very far behind as a country.
Understood. So, the machines itself, if you buy a new machine there, latest technology, that itself can drive a significant competitive edge versus some of the existing suppliers who may not have invested in the machinery over the period of time and in rigid boxing, rigid packaging. Yeah,
absolutely. It's the same story as this, our paperboard packaging. When you buy a new printing press versus an old one, I can, my competitor who has an old 20, 30-year-old machine, he can match my one carton and he can show 1:1 same, for approval for a customer. But when he has to make 1 million of the same, that is where the problem comes. So it's the same thing in this. If I have to supply like 500 pieces or something, my machine is of no use. But if I have to do 5 lakh pieces, and the customer wants it in a certain number of days, then this automation and high value machinery is really making the difference.
Understood. Second question on the exports bit. It's a very commendable performance. We've almost doubled it seems like export revenue in just 2 years. Now, I thought the first year was, supported by paper prices, but delivering the kind of growth last year itself, despite adverse paper prices, I'm just trying to understand what's driving the growth and how sustainable can it be. Are we reaching a base where you feel that the growth rates need to taper down from what you're delivering, or do you think that you can continue at the high rates that you're delivering?
So, Pulkit, you ask me this question every year, and last year also I kind of gave you we gave you a non-answer. So this year also we will give you a non-answer only, because we can't predict. And even if I wanted to predict, I don't know if I want to discuss in an earnings call.
Sure. Just last question on the margin. Quarter on quarter, 250 basis points improvement in margin. Unseen before. But would my understanding be correct that 260 basis points? It's largely driven by RM price decline and product mix, and the subsidiary change has lesser to do with this margin change, or would you say no, it's the subsidiary delta which is leading to a larger chunk of this margin performance?
No, it's largely driven by RM improvement, which is a result of RM price change, but also a result of product mix improvement, which shows up in better RM contribution. So it's mostly this, I would say.
Understood. Well, thank you and all the best.
Thank you.
Thank you very much. Next question is from the line of Vivek Tulsian from Newmark Capital. Please go ahead.
Can we keep this as the last question, please?
Sure.
Yeah, I just wanted to know if you could share what is the broad growth on the volume front on the paper packaging business?
Yeah. So for this year, it's been very low single digit, and even for the quarter, it's been low single digit only. It's not that there's not been a growth, but it's been fairly anemic growth.
Understood. And would it be similar on the flexible packaging side, or there we've seen higher growth?
There we have seen higher growth this year. Yes, certainly.
Will you be able to quantify that?
No, not really, but it's been certainly much higher.
Understood. And just one last question on the pricing. You mentioned the paper pricing has come off YOY. Would you be able to tell us broadly what that number is in terms of how much is it down by?
Bit difficult to answer because recycled board has come down, went up a lot more and came down also a lot more. And when the virgin board went up not as much and has come down, therefore also again not as much. But basically recycled board at the peak had doubled. And by now it's still little higher than it was before COVID, but not by a whole lot. So it's really come down a lot. And in the virgin board, I think we had gone up maybe 50 to 60 something percent. And that again has largely been clawed back.
Okay, perfect. Thank you so much.
Thanks.
Thank you very much. I'll now hand the conference over to the management for closing comments.
Thank you. I hope we've been able to answer all your questions. Should you need any further clarifications or if you would like to know more about the company, please feel free to contact us or CDR India or read our, visit our website. Thank you again for taking the time to join us on this call. We look forward to interacting with you next quarter.
Thank you very much. On behalf of TCPL Packaging Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.